All right, so Bitcoin has finally shown some signs of life, right? We saw that big bounce and now everyone's talking. But the big question is this the real deal? The start of a true recovery? Or is it just a temporary blip on the radar? Well, today we're going to cut through all that noise and look purely at the on-chain data to see what the blockchain is really telling us. So let's dive in. So yeah, that's the central question we're all wrestling with. That roughly 15% jump we saw, was that the beginning of a sustainable recovery? Or was it just a relief rally in what might still be a broader downtrend? The on-chain data actually gives us a surprisingly clear picture on this.
Okay, let's start with the case for a recovery, analyzing the bullish signals. First, we'll look at the optimistic side of the argument, and there are some really solid, data-backed reasons why this bounce happened exactly where and when it did.
You see, the bounce began at what we call a mechanically significant level for investors. Now, what does that mean? It means this wasn't just some random point on the chart. The price found support exactly where the on-chain data predicted a whole lot of buyers would step in to defend their positions. It's like a financial line in the sand. So what was that critical level?
It was right around $85,000. Now, that number is tied to a really powerful new on-chain metric, the Bitcoin ETF realized price. Basically, this is the average price that all the spot ETF investors paid for their Bitcoin. And when you think about the billions and billions of dollars that have flowed into these ETFs, well, that average cost basis becomes a massive psychological and, frankly, financial support zone.
And the timeline of events really backs this up. It's a pretty clear sequence. First, we saw the Coinbase premium gap start to rise. That's a good indicator of U.S. institutional demand waking up. Then, in early January, that was followed by a string of strong ETF inflows. And what happened next? Bam! The Bitcoin price bounced about 15%. So the data is pretty sternly suggesting this wasn't just retail FOMO. This looks a lot more like strategic, calculated buying.